In today's video, I'm going to read some of the really good comments that I obviously agree with. I must admit, with all the number of trolls out there on the internet, my channel just doesn't attract any. I'm not calling for any, I'm just saying I'm pretty lucky that way. After that, I'm going to show you a clip that is going to enlighten us as to what's going on currently in the property market. This comment is on the video that was titled "What You Need to Know About Australian Property for 2019." So it was from X777-1235813. The fall, in part, in my opinion, is due to the profligate lending by usurious private banks. The Commission was just window dressing. The Commissioner thanked the bankers for their honesty. The whole show is still an obscene scam to turn a basic human need for shelter into a nightmare of stress and slavery for hard-working families. Couldn't have said it better myself. Okay, the next one is on my video titled "Exposed Here: How Media Programming is Meant to Confuse You Today." This comment was from 000-789456123. Below, a collection that will influence house prices in 2019. Any more ideas? Question mark. Number one, tighter credit from banks. Totally. Number two, increased supply of houses and apartments. Totally, again. Number three, fewer foreign buyers. Exactly, Chinese are gone. Number four, record household debt. Can't disagree with that. Number five, higher interest rates. Maybe, in my opinion, there'll be low interest rates in the short term and then they'll hike it up. Number six, changed market sentiment. No more FOMO, fear of missing out. There's no more fear of missing out. That's totally looking like what's going on right now. It's nobody's fearful of missing out on the property because it's just sitting there, and worst case scenario for buyers is that they're not going anywhere else. Okay, number seven, concerns about construction quality in the apartment market and flammable cladding. Totally, we all know what happened to the Opal Towers. Number eight, capital gains and negative gearing reform. And the commenter says, please add more comments to get a more complete picture or more compatible. I think this was a very comprehensive list of what influences property, Australian housing in 2019 and beyond. Such a good comment to end the comment reading portion of this video. So once again, it's tighter credit, increased supply, fewer foreign buyers, record household debt, higher interest rates, changed market sentiment with no more fear of missing out. Number seven was the concerns about construction quality in the apartment market and flammable cladding. And number eight, last one, was the capital gains and negative gearing reform. That's a good segue into this next clip, which is really can be called a construction update.
The construction bust continues, with March figures showing a seventh straight month of contraction in building activity. In a slight snippet of encouraging news, the construction index rose 1.8 points to 45.6 in March, up from February, and pointing to a slowing in the rate of decline. But activity in housing and apartment construction continues to drop at a rapid pace, spurred by falling prices, tight lending conditions and cautious buyers. Commercial construction also weakened. However, engineering construction stabilised in March on the back of new project starts and tender opportunities. To the markets which...
And then in the same clip, or in the same report that was aired on Friday 2 days ago on ABC, we've got this.
We do still have those fundamental facts that are pulling the Aussie dollar down at the same time that will probably continue in the months ahead. We have obviously the slumping property market, and that's really feeding through into weak economic growth in Australia. And that's feeding into the prospects of the RBA cutting rates later this year. So that will continue to weigh on the Aussie dollar.
Finally, Eleanor, an Aussie favourite, Vegemite, appears to be feeling the bite.
I know Bega cheese are feeling the pinch from this slowdown in consumer spending. And a lot of this is coming as we do see that consumer spending is around 60% of the Australian economy. And consumers are feeling the pinch because we've seen a significant slide in house prices at the moment. Sydney property prices are down around 14% off their July 2017 peak. And that is weighing on the outlook for the consumer. And that has fed back into the ASX. And we now have consumer staples stocks are actually the worst performing stocks year to date on the ASX.
Eleanor Cray, thanks for coming in.
Thank you.
Okay, so it seems that even the Vegemite makers are feeling the pinch from slumping property prices, as they put it in this report. I kind of don't understand. I know that people and the consumer confidence and the consumer sentiment is down because of the falling property prices, but for every buyer or seller of property or property owner, there's somebody who wants to buy. So when they see property prices going down, those people are probably happier to see it slide so they can buy it for less. So it's really weird how this sentiment works. It also works on people who have never thought of selling their house, but their house, say, used to be worth $1 million, and now it's about, I don't know, $850,000, but they never were going to sell that house, yet they're feeling down about their house not being worth $1 million anymore, let alone being worth $1.1 million next year. And, 5 years down the track, maybe $1.5 million. There's the wealth effect, but it's been documented, it is in place. This is why the consumer sentiment is down and the spending is a bit down and everyone's a bit cautious, but I think that can sometimes be a good thing. With that, thanks everyone for watching, and we'll speak again next time.